Knowing when to take profits is as crucial as knowing when to enter a trade. Let's delve into the psychology between holding and selling. Hey, ever sold a stock only to watch it soar higher? I mean, it's happened to all of us, or have you held too long and gave back all your profits, or the cardinal sin? And listen, I've made plenty of mistakes, turning a winner into a loser. Okay, that's the cardinal sin. Mastering the art of taking profits can significantly impact your trading success, obviously, because your account grows, but it can really help with your mindset too, okay? Yeah, I mean, I know a lot of you guys have been there, and I've made every mistake 1,000 times. Like, it can really mess with your psychology when you're up $1,000 and then all of a sudden you're down 1,000. Like, first of all, the pain of giving up those profits, but also just that mindset of like, man, I really screwed this one up. So let's work on fixing that. There's a lot of emotional challenges that come in taking profits. A lot of it's, at the end of the day, is just greed. Okay, you're up, a big amount on a low price stock, and it's a huge percent gain. But let's say it's 10 a.m. and you're like, well, there's a lot of day left. There's a lot of volume in this stock. And even though I've got a really good gain, hey, maybe if I stick around, I can double this. Now, what I want you to really focus on is always having that plan of where you're going to take profits and what you're going to do if that stock's uptrending and then the volume starts to fade and the price action starts to fade. Now, it's one thing to aim for bigger profits. There's nothing wrong with that. If the volume's there, still building through the day, the stock's above VWAP and it's trending up, well, then you get greedy. But where the greed gremlin, as they say, will get you in trouble is that momentum starts to shift. And now instead of being up $1,000, you're up 900, and you start thinking about that 1,000. You're like, man, I really liked when I was up there. And then stock continues to trend lower, and then you end up making that cardinal sin of giving it all back or turning that winner into a loser. So that's why we always have to have our profit targets. I mean, it's really important to set an expectation. I like using 3-to-1 risk to reward as a good guideline. But that doesn't mean you hold out for that profit target no matter what. So you buy a $1 stock and you think it can go to $1.50 and you're risking 90 cents. So, you got a good trade plan. You've looked at the previous chart history, the volatility's there. It's made moves like that in the past. You're not picking random levels. Like, this stock has moved like that before. And, 10 cent risk for 50 cent goal, great risk to reward. Then the stock goes in your favor. Now it's at 110, it's at 120. It's at 130. Your goal is 150. But then, as I mentioned a minute ago, volume starts to die. Stock starts to trend sideways. Where I see a lot of people screwing up a trade plan is they're like, oh, I want 150 no matter what. Now, I use this quote all the time, actually 2 quotes. One is, no battle plan survives contact with the enemy. And another one by Mike Tyson, everyone has a plan until they get punched in the face. What both those quotes mean is you have to respond to real-time price action. You can't become too over-biased and hold out for profits that are just at that point not realistic anymore. Now, maybe it's the morning, stock's making crazy moves. You think 150 is definitely achievable, but now it's slowed down. We're into the afternoon and the volume's lower and it's at 130. That's where you got to recognize, you know what? I'm going to take that 30% profit. Still a great day trade for a couple hours. And, I had a good plan, but it didn't survive contact with the enemy. Okay. So that's where you always are using your indicators, using your price and volume, using VWAP, a lot of these things I talk about on the channel to guide you through. Now, the other thing you can do is use trailing stops and scale out. Now, there's a couple rule of thumb here, okay? With trailing stops, I want you to be careful on really volatile stocks, the penny stocks that we day trade. Trailing stops are amazing on higher priced, slower moving stocks. Now, the reason I mention this caveat is what can happen with really volatile stocks is they can pull back too fast to trigger your trailing stop. A lot of people get in trouble there. Like, I recommend, if you're day trading really volatile stocks, you're very, very cautious with using trailing stops, because a lot of times people think they're out and they're not out. Now, if you're swing trading, which is another strategy I use and I teach, we're trading mid-price stocks in hot sectors that don't, go up 100 and drop 50, use trailing stops all the time. The other thing that I highly recommend, and this applies for volatile stocks or slower moving stocks, is scaling out. Okay. So if you, going back to that previous example where I talked about that trade plan of a $1 entry, a 90-cent stop, and a $1.50 goal, that stock goes really parabolic. Like say it goes to 120, 130 in a matter of seconds. One thing that really can lower your stress and allow you to stay in the stock later is booking some gains. Okay. Maybe you don't take off your whole position. You take off half or you take a third. What's great about that is, first of all, books the profits. You got the money in your account now. Plus it reduces your position size so you're not as stressed out. And, when the stock up ticks, down ticks, you're not panicking every time it down ticks 2 cents because you got a smaller position size. Now, as I mentioned a minute ago, that is a little bit for bigger accounts. I mean, if you're trading a couple hundred shares, normally I just tell you in and out round trip. But if you are trading bigger position sizes, thousands, tens of thousands, hundreds of thousands of shares, scaling out is a great way to lock in the profits. Then you're working with houses money, as we call it, and lowers your stress. You can just kind of let the stock work. Again, I kind of touched on this. You always have to be analyzing market conditions real time, recognizing signs that are important to recognize when the momentum is shifted. Now, moving averages are great for this. EMAs are great for this. I really like to use VWAP almost exclusively. In VWAP, again, you can check out the channel. I've probably got 100 videos on it. It's the #1 day trading indicator. And it's really just a good guide of whether a stock is currently perceived to be bullish or bearish. So if you're in that stock that's uptrending, you're in the green, falls back below VWAP, it's a good indication the momentum is shifted. I'm going to move on, okay? Or vice versa. You're in that trade, it's uptrending, bust through VWAP. That gives you a little confidence. Be like, yeah, here we go. So always be reading the real-time price action. Don't close your charts. Don't ignore it. Don't just buy and hope. Understand, no, and I know this is the third time in this video, no battle plan survives contact with the enemy. You have to react. Other thing I want you to really be focused on is learning from past trades. Now you have to track your data. Okay, this is where a lot of people don't put in the work. But if you're filling out the journals that I give, the trade trackers that I give, you have all the pertinent information so that at the end of the day, end of the week, end of the month, you know exactly what you traded, what your position size, what the trade setup was, what the news was, what's the float rotation. Now, most don't write that data down. Like you've probably heard, study, 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 track, track, track. And then you're like, how do I do that? Well, you have to have some data to study. You have to have some data to track. So the very first thing you should start doing is using a journal and a trade tracker to collect all of this information. So now at the end of the day, end of the week, and the month, you have something to actually analyze. So in summary, how do you decide when to take profits? Do you sell the first uptick? That's what a lot of new traders struggle with. They buy, they're in the green. They're like, oh my goodness, I'm finally green. They sell and the stock rips higher, okay? Do you use boredom stops? Do you have a trade plan? Do you have a profit target? Now remember, with profit targets, doesn't mean we hold out for no matter what, but are you thinking about this? Are you planning this? Let me know in the comments, like what's your best way to identify the smartest time to take profits? And that being said, if you want to know how to track data, if you want to recognize price action, if you want to have the scans and all the tools and algos and education to help you identify all these things and learn and grow, check out the Daily Income Trader System. When you hit that link below, it'll take you to a free webinar. You'll see exactly what we do every day. You'll see the tools, the templates. You'll get access to the worksheets and trade trackers, and it will really take your trading to the next level.